Hey, what's up, everybody? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. We're getting ready to open up the week with the New York session. Well, yesterday did actually, but this is the first day of the week that we've done a live stream. We were pretty busy last week and all the news prints that we had. So we're gonna see if we can find us a setup this morning. Currently, what we have going on is Bitcoin is bouncing off of weekly support, finding a small bid. You can see that the S&P 500 has also bounced. There was no weekly support for the S&P 500 to bounce from, so it kind of just bounced in the middle of nowheresville. If I bring up the weekly chart here on the bottom left of your screen, you can see that, yeah, you came close, but no cigar. Same could also be said for Bitcoin, but Bitcoin's is much closer to an actual test. So it looks like it just got front ran a little bit. Um, Last week closed out red. It's Tuesday. So far, we have a pretty decent sized move to the downside. And now we're back to green again, which is amazing, right? Right. Anyways, what we're probably looking for this morning on Bitcoin. First, let me say this. If I give you a trade signal, because we do trade live here on this channel, if you do take any trade that I give to you, please make sure that you are only risking in the amount of money that you do not mind losing. That is correct. When we take entries, we have to worry about that risk. Make sure your risk is mitigated. It is your money. It is not my money. So if you go 100x on any position that I tell you that I am taking and you lose money, it's your money, not my money. Okay? Please respect your money. I know how much I'm risking each and every time I take these positions. So please understand what you are risking. And don't fat finger anything. If you're new to trading and you don't quite understand anything yet, please do not try to take these positions and make money. Please learn the process first, and then you can join us every Tuesday and Thursday as we operate in the market while the market is open. So back to the analysis. Good morning, everybody. Lots of good mornings, good mornings, good mornings. Yeah, kind of having a great morning waking up to see that the BOJ has adjusted their yield curve controls, as that is only helping my USD JPY short. You can see that happen last night. So that's phenomenal. I was wondering if it was dollar strength when I first looked at the monitor, or dollar weakness, but it's not. It's JPY strength. We'll go over everything here in a second. What we're looking for in 8 minutes is potentially a spike up. I don't know if you're going to get a run all the way above the daily high, but we are looking to fade this move. So that means we are looking for short entries on Bitcoin. We're probably going to be looking at hourly res, and then there's a 4-hour resistance level I want to monitor as well. That is if we get an entry. I am not chasing price. I cannot take the entry right now. I need it to provide an entry for me. So let's delineate what these lines are. So that way when we go down to the smaller time frames, we don't get confused. So 4H res just means 4-hour res, 1H res, same thing. All right, boom, boom. I would prefer to take an entry at the 1-hour res, but we may not get it. Excuse me. All righty. Let's see what we got going on over here. Let me make sure I am logged into my broker this time. We were looking for the short on FOMC, and my damn broker was not logged in, so we missed the short. All right, there we go. All right, so basically there is no news. Well, I can't tell you if there's news. When I pull up my favorite economic calendar and foreign exchange news website, I get this horse shit. Now, being in America, this really sucks. And I know Daily FX operates out of New York City. I mean, one of their analysts, my favorite analysts that they have, James Stanley, is from Texas and currently lives in New York. So I don't understand why this thing says stop from December 19th. This website is no longer intended for the residents of the United States. Content on this site is not a solicitation to trade or open an account with any U.S.-based brokerage or trading firm. By selecting the box below, you are confirming that you are not a resident of the U.S. A, I don't click links, and B, I am a resident of the United States. So, I'm waiting for some answers on that. All right, moving on. Let's get Bitcoin up on the big screen real quick so that not this one, not this one, not that one, this one, please. Thank you. All right, so I'm amusing myself, as you can see. Here we go. So we got in that bounce. Why am I looking to fade it? Why am I not looking to be a buyer? Well, because of all this, right? Is it possible that we do find support and Bitcoin's low is in? Absolutely. In fact, up until this move right here, I was 100% convinced of that. And I had positioned myself for that. So, yeah, well, we shall see what's going on. Yeah. But anyways, you must stick with the trend, and the trend is down. And maybe it doesn't make a new low. Maybe it finds support. But for now, we're looking for the short. It's just an intraday trade, right? Just an intraday trade. So we got 4 minutes until the open. I want to see a spike up into 16,813 spot 67 or 16,842 spot 94. Preferably the higher one. And then I want to see price fall back under it. This is where I'm looking for my bearish entry. And then this will be my profit taking area. 16,780. You can see we've already touched it twice. So I can't take an entry right here. Up here, I can. You see? That's called mitigating your risk. Also, using a good risk to reward to even identify if there's a trading opportunity or not. I have a video on my smaller YouTube channel that shows you how I go about doing this. You can use this tool, this risk to reward tool, to see if there's even a trade setup worth taking on the day. It's a phenomenal video. You guys should go over there and subscribe to that channel as well. All right, here we go. So this is what the opportunity will look like if it does indeed come up here and trade into this area. I can't take I would much rather take it up there because that's just a 2-to-1 risk to reward. If I take it here, it's a 1-to-1 risk to reward. Because yes, I want it to break down, and if I get short, I hope it breaks down, but we can't expect it to. We can't expect price to do anything, as we are not forecasting the direction of price. We are simply identifying good areas to apply risk. We are looking for high probable areas to take trade entries. That is how we remain consistent and profitable, by doing thus. All right, so market's getting ready to open. Let's get this over here. You can see you've already made a nice little run to the downside on the SPOOs. So getting short down here, probably not the best idea in the world. But especially since the first 2 days of the SPOOs was bearish. So I guess technically, if you are bullish thinking that since Monday and Tuesday are bearish, this could potentially be the weekly range setting a false move to the downside, and you could potentially be looking for a weekly expansion this week to the upside. If that is the case, well, then you got to identify good areas for buying opportunities. You are currently not at one. You are currently at the top of the daily range. We do not like to buy the top of the daily range. Also, if you look at this right here, it kind of sort of looks like sellers are stepping up because the point of control is at the top of the daily range. If it looks like the buyers were going to be in control of the market, you would want to see, shit, this is Bitcoin. Sorry, give me 1 second. I need the SPOOs up there, please. And thank you. It doesn't matter. It's the same thing there. You would want to see, and there's the market. We are off. Hey, ladies and gentlemen, Bitcoin trading at 16,709, 18 cents. We're moving up right now. Everything looks amazing. Oh my God, can you believe the size of that candle? Oh my geez, the whole world is a phenomenal place. Oh, look at that. Aren't you so glad you came here and listened to me this morning? Blah, 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 blah. No, actually, we're waiting for a setup. So this is what we'd like to see. Now, one could arguably say, yeah, this is supply. So why can't we just get short now, Heath, and then, make $1 million today? My answer to you is simple. The risk to reward is not as good from here as it would be from up here. Secondly, I don't believe you'll run above the daily high. This is your daily high up there. But I would like to see a test of 4-hour resistance. Make these people right here get a little bit scared, if you will. Then we can short it. But down here, not really. We might not get the chance. Might not get an opportunity. Short is definitely the way I want to go, because I think this big pop is probably setting in the weekly high and not so much the weekly low. But I could be wrong, because like I said, the SPOOs has been bearish for 2 days in a row and is bearish right now still. So here is your open on the SPOOs. Right there. There's your daily open. You can see set in a high of day, rolled over, came in, set a low of day. London session has called the low of day for now. So here we go. Make sure everything is ready to go, because I am not wanting to miss this. Yeah, we'll discuss it once we get into the position. Just give me a second here. We got 27 minutes left on the close. We may not get it. We may. 1-to-1 just doesn't sound that great to me. And like I said, we could be altogether wrong by looking for shorts. I don't think we are, but you could enter based on this right here and maybe take a small piece of profits off there. Understand that it's because it may not go up there, right? This may be as high as it goes, but your risk to reward is not as good by taking it here. And like I said, there's nothing that says it has to go down. It's just a higher probable area. Wait a minute. On the 4-hour chart on Bitget, Okay, this is 4-hour res. Got it. This is just the top hourly resistance. We got a bullish engulfing as well on the hourly. The point of control suggests that it's probably going to be a sell-off. If it wants to run above the high of day, that's fine too. Right? We'll know when we're wrong when we get stopped out. Where is the chat? What the is going on, YouTube? There it is. What's up, guys? Sorry. All right. Yo, what's up, trade talkers? Yeah, I guess we could take it here and pray that it works. But where are you going to get your risk? Where are you going to put your risk? Up above the high of day? I mean, if it does do what I think it's going to do, then more than likely it's going to break down below this support. So we could go ahead and take the short now. Maybe we could close it if we get a solid push before taking a full stop. And then we could reposition ourselves a little bit higher. That's the problem with these things. Let me get you on the 5-minute over here. That is not daily res, is it? It is daily res. So you are currently trading above D res and the weekly open. So you're bullish on the week, but this is the one we want to watch. Is D res also 4-hour res? Yeah, D res is also 4-hour res, so we'll leave it alone. This top line is the line where we're kind of looking for entries. And you can see because of this damn wick up there, that's where the high of day is. So you would have to push all the way above that. And it is possible. There is no news event, so getting above the high of day makes the trade a lot less probable. Because typically if these levels are going to be respected, you generally just want to see a tag of the level and then an instant reaction. Because these are objective resistance levels. Objective, not subjective. So a lot of times we have seen the level just barely get tagged and then price. So that's what we are looking for. We are looking for a short around 16,842.94, but we'll also take a short up above the high of day if it does go for the liquidation break. If we get above the high of day and we continue to push, then there just will not be a trading opportunity. Like I said, if you are bullish, you should have been looking for entries as close to this level as possible, as this is support. And it's the only support you've gotten on an hourly time frame since the low or since the open of today. It's the only and lowest support. Let me see, what's the VIX doing? So the VIX had a big gap up yesterday after the market closed. The price we were watching on the VIX for potential bullish entries is not on this chart, but it's like 22 something. Right there, 22.40. We were watching 2240 for bullish entries on the VIX. If today does not close below 2240, then we could potentially be looking for longs on the VIX as well. If you are new to the channel, welcome. Make sure you subscribe. Click the bell notification. That way you get notified whenever I go live, because we do take real trades here. 100% real. We are really doing it, man. Or woman. Or whatever you identify as. I'm not trying to misrepresent anybody. Here we go. The VIX is pushing down. Let's see if it gets down to 2240. The way you could do that is by, buying the underlying asset, which means just get long the VIX. Or you could buy longer dated option calls. At the $22 strike. I don't suggest buying the $23 strike. This 23 is all the way up here, and you would need price to get to 23.20 just to break even. So here we are. We're getting a test of the high of day on the SPOOs is right there. So a liquidation of that would be awesome. There's an entry. On the Bitget platform, that price is, let me get my glasses, 16,822. I'm joking. My glasses are not in here. I don't know, maybe that's wrong. That's the 4 hour. What's the 1 hour on the Bitget? No, I'm wrong. That is not the level we are looking for. The level we are looking for on Bitget's platform is 16,836. Bitget is, and it has been tested. Bitget is the exchange that we trade on because they have the cheapest trading fees. So short right there, 16,842.94. Current risk is high day. If we continue to push up there, risking 2% on the position, then we could close the position and wait for the high of day test or the high of day run. We got 18 minutes left on this hourly close. So if we close above this price, then it's going to make us close the position as well. Because if you close above resistance, there's a higher likelihood that your trade is wrong. I don't even know what that first price on Bitget was. Actually, let's just get rid of it. But what I was saying earlier before I got sidetracked was we use Bitget to trade because they have the cheapest trading fees than any other exchange in the world. Exchanges are very dangerous right now. So please, if you want to trade on it with us, then use my link down in the description. It is an affiliate code. I do get a very, very small, tiny amount of money. If you use it, please use referral code XTSC when signing up. But understand your risk. Understand that crypto is a very dangerous and new space. There is a ton of risk associated with it. You know this. If you've been in crypto longer than 2 weeks, you've heard about FTX. Was the second largest exchange in the world, and they went under. And everybody that had funds on FTX lost their money based solely on the fact that they were, it was a scam. So please don't get scammed. I don't know, FTX said that everything was okay the day before he filed bankruptcy. And then he had another tweet that said FTX US we're not filing bankruptcy for FTX US. And they did. So, I mean, he lied every step of the way. So as far as I'm concerned, you can't trust any foreign or any crypto exchange. So please only put an amount of money on the exchange that you are willing to lose. You can get up to 125x leverage on the platform. So take, 1 to 5% of your total trading capital and only put that amount of money on exchange. If you do that, then if they close the doors or you wake up one day and you realize that you can't sign on and your money's gone, you only lost 1 to 5% of your trading portfolio. All right. And if you want to own Bitcoin, then buy Bitcoin, then transfer it off exchange immediately into cold storage. Either a Trezor or I have a Ledger Nano X and a Trezor as well. Those are the two that I use. I don't have any affiliate links for that, but just use whatever you want. Just be safe, please. So you can see the level that we wanted price to tag got tagged. 16,842. That's entry. Stops above the high of day. Currently, we're looking for this price, 16,780. Price pushes down there, you will take profits. You will close out a portion of the trade. You will leave a small portion on. You will move your stop to break even. This allows you to pay yourself for taking the risk in the first place, makes your P&L go up. Then you are now protected, so you cannot lose a single penny of your own money. Now, you will lose any unrealized P&L, obviously, but that's what you're risking. And it's much safer to your overall equity if you are only risking unrealized P&L instead of risking your P&L. Pepe the cat, what's up, my baby? He says, I identify as a cat. There is our take profits, so go ahead and take profits. Move your stops to break even. What a beautiful trade. I mean, it worked out beautifully. This pushed right up into our entry. I got filled on a limit order, and I am taking profits now. I am moving my stop to break even. Let me just go ahead and do this. All right, there we go. Now, you can leave this unrealized position open because you might just caught the high of the week. Or, you didn't catch the very high of the week because the very high of the week is right there. But maybe. I don't know that it's going to be the high of the week. But there you go. Now you're getting a nice little push to the downside, which is, phenomenal. That's what we wanted to see. U.S. government sends money to Ukraine. Part of that money went to FTX. FTX took the money, donated it to the politicians. All right, Wes, let's not get political. We don't do political stuff here on this YouTube channel. We only discuss price and price alone because that's all you need. You can see that I do have an indicator, just one. It's just volume session, volume profile. If you are going to use volume profile, please use session volume profile, because it's literally the only one that gives you an edge. And it doesn't even really give you an edge. It just shows you where the majority of the volume is traded at on the daily range. Good morning. Good morning. Good morning. Ed identifies as a couch. Beautiful. You can see the VIX didn't quite push down to our 2228 level. If it would have, I would have absolutely. Wait, what am I on? The wrong one. That's okay. I thought there for a second because I didn't get the exact fill I wanted. So I was in drawdown there for a little bit. I thought it seemed a little bit high when the P&L ran into negative territory there for like a split second. Only a split second. So you should be done, ladies and gentlemen. You should be done. It's that quick. It's that simple. We were talking about this since the stream started. This is the entry. This is the take profit. With that risk, it was a 2-to-1 risk to reward. So if you're risking 2%, you made 4% minus any fees that you will pay out to your brokerage. That is unfortunately just life. Bitget has the cheapest fees than any other brokerage out there or exchange out there. Link in the description. All right. So yeah, move your stops to break even after taking profit. You can still do that. I mean, because you're still under your profit. Do not be like, yeah, but I was at $1,000 in profit down here, man. I'm waiting for it to get back down here, man. Don't do that. This is your profit target. You got to be consistent. Take profits at your profit target. Move your stop. Because if the buyers show up, which they very well could, I mean, that's a big spike right there. That's going to entice a lot of people to, FOMO buyers to come in there. So if that happens, you will get stopped out. So by taking profit, you've already done your job as a trader. You identified the opportunity. You took the opportunity. You paid yourself. You've moved your stop. So that means you have limited your risk. You are done. Now, if you get downside continuation and it does end up breaking down lower and lower and lower, then that 30% piece that you left on, that will end up making you more money than the original trade did that you took in the first place. So don't allow your greed to destroy a perfectly good, working, profitable strategy. Because your brain will destroy a perfectly good trade. All you're trying to do as a trader is to identify areas to operate. You get in, you get out with a small piece of money, and then you come back and repeat the process day in and day out. You do not ever let greed get in your way of a good trade. I used to do that so much when I was in my beginning stages. I would let greed take over and I'd be like, oh man, this thing's going to go down forever. And next thing I knew, I was eating a loss. So I was in profit, a phenomenal amount of money. And then I ended up taking a loss instead. That is never what we want to do. Never what you want to do. I take 70% of profits. Give me 1 second here. I take 70% of the position off and I leave 30% of the position on. So like on the USD JPY trade, I shorted it with 3 lots and then I took 2 lots of profit that day off. Then I moved stop to break even. So I'm still short with 1 lot, right? Or a little less than 1 lot. So if I get downside continuation, then I'll make more money. And then I can, then I can manage that unrealized P&L. If you get in a nice place, like for instance, if this does continue to go down, I'm not saying that it will. I'm saying if it does continue to go down for the rest of the week, then all of that unrealized P&L from 16,842 down to wherever this thing closes at the end of the week, you can cut that in half by taking 50% of that, or however you want to manage that. You know what I mean? It's up to you how you decide to manage your positions. What I want you to do is get in the habit of taking profitable trades, taking your profits, and then moving your stops, because there is this thing in the market called random market violence where you get a big wick. Here, I'll show you one. At the beginning of the week, I posted my favorite, sorry, I'm still a little bit, I just woke up not too long ago and I'm groggy because of medication, but, I said that NZD USD was one of my favorite FX pairs, looking for, to hedge against any potential strong dollar trades. So basically, this is where we were looking for that entry, not right there, right there. And if I pull this up, show you where we were yesterday, Monday, you can see how we were trading. We broke down below where we were looking for. So if you take an entry, like say here off of this supply zone right here, say you got short on this candle, boom, short, and then you put your stop wherever. And then on this move lower, you took profits, moved your stop to break even. Then at 2200 hours last night, price came right back up and stopped you out. And then rolled over. Oh, Bitcoin's right back to the entry. So hopefully you did what I said and took profits and moved your stops to break even. And you should be pretty damn close to being stopped out, if not stopped out. And that's the reason why we do that. Because you can be on the wrong side of the market and still make money. I do not. My job isn't to try to guess which way price is going to go. My job is to make money. My job is to get in the market at a specified time, at a specified location, take my money, and run. That's my job. We had a profitable short trade. We made money. We've been stopped out. It's all good. The day's done. We will repeat the process Thursday. Amazing. Paid in 10 minutes. Yes, sir. Yes, sir. Gotta love it. I love my job. It's the best job on the face of the planet. Now my day is done. Now I can spend it with my baby, I can do whatever I want to do for the rest of the day. Love it. Awesome. It would have been nice to see downside continuation, though. I'm not going to lie. It's always nice when you can get downside continuation. Let's put it on the 4-hour real quick. Always nice when you can get downside continuation, because it could end up looking like this eventually. This is weekly support down here. That's why I got the line, but this is our USD short that we took on JPY. We are pushing well above the high of day. Hang on, let's go back over to Bitcoin. Well above the high of day. Well above it. This was the high of day right there. So this does not look like a short anymore. See, I was concerned about it not being the top of the weekly range because the S&P 500 was bearish the first 2 days of the week. So the S&P 500 could have potentially just put in the low of the week down here last night. You know what I'm saying? This could end up ultimately being the low of this weekly candle. Now, this weekly candle doesn't look as good as Bitcoin's because it's not green. Right? Bitcoin is already back to being green on the week. But you do have weekly res. I'm not saying that you can't try to take another short of this thing either. I'm just saying don't give your money back. I'll say that. Whatever money you made this morning, don't turn around and give it back today. Wait till tomorrow. There's opportunities in this market every single day, guys. If you trade my strategy, you can be on the wrong side of the market and still make money. There's not many people out there that can say that. Their strategies dictate and rely specifically on if price goes their direction. My strategy only dictates and relies upon if you can identify high probable trading scenarios, high probable areas, objective price points. Learn what an operating range is. Learn how traders are actually making money in the markets. Nobody knows which way price is going to freaking go. Not 1 second from now. So how in the hell can you predict if the bottom is in? You know what I mean? It's impossible. Subscribe to the channel. Smash the like button. Share this stuff across all social media platforms so people can understand that there is a man out there making money and it doesn't matter. Or there is a strategy out there that you can make money and it doesn't matter, literally, which way the market goes. You just have to have a trading idea, trade setup at a high probable area. Bitcoin pushing, man. I do have a couple members in the YouTube community. In the Trade Talk community that did get long at weekly support. So they're loving this morning. Absolutely loving it. And my HODL portfolio, my cold storage is absolutely loving it. Trust me, I would much rather Bitcoin go up. I make so much more money when Bitcoin just goes up. But when it goes down, I make money too, right? It was a phenomenal year because we nailed the short at the high, almost at the damn high of the market. And then we nailed the short again in March when it made fresh yearly highs. So we definitely crushed it this year on a couple big trending trades. But did I know that those trades were going to be big trending trades? Of course not. It's impossible for me to know that. This trade ended up being a big trending trade. This is our short entry there. We didn't just guess There is a technical reason why we took that trade for the new people. The people that are not new have heard this every day almost since the trade was taken. But for the new people, because I do get a couple new subscribers every day, yeah, this is where we shorted. We were looking for dollar weakness, right? We were looking to short the dollar. We were looking to buy risk because we thought the lows were in. So we took a swing at it. And naturally, you can see how many days I've been sitting in this trade. And I will continue to sit in this trade as long as it's not going against me, right? If it finds support and it comes all the way back up and makes a fresh yearly high, which is very unlikely because it's the 20th of December, but 2023, it might make a new high. But for the rest of this year, this trade is paying me. That's doing pretty good. I caught this trade doing the exact same thing that we just did on Bitcoin. So sometimes you're going to be on the wrong side of the market because we took the short and we made money, right? And then sometimes you're going to take a trade and you're going to get continuation. Those times, that is when you really see your P&L just explode with growth. Can we do it again? Johan, no. Because the problem with new traders especially is they don't have any problem with making money in the market. They tend to make money. They just always give it back. I want you guys to get in the habit of slowing down how much you're trading, because trading more puts the probabilities further in the you're probably going to lose category than you're probably going to win, right? Because it just does naturally. That's how probabilities work. The more times you take risk on, the more chances you have to lose. So on the days that you're profitable, hang on to that money and wait till the next day. There is an opportunity. We are day traders. So that means we're looking for setups, a day trading setup like we just took today in each one of these candles. Every single one of these candles provides an opportunity that we just did. Every single one. You do not have to ever FOMO or chase price. You can simply take your money today, close down your computer, and be done trading for the day. And you'll find out that this will help it'll help your mentality so much, because you'll be walking around with a smile on your face all day. You don't have to tell people why, but you'll know why. I made money today trading. That is a good thing, right? But you just don't want to give it right back. That always sucks. You make a quick 5 to 8 or 12%, whatever it is, and then you throw it away. I made a little bit over 12% on that trade. And then you throw it away by entering a new position, and then you're wrong, right? You're wrong. So the trade goes against you, and then you lose money, but you want to be right so good and so much that you try it again, and boom, you lose again. And now not only did you lose all of the profit you made, but you've also dwindled down some of your trading capital. No, take the win and wait for tomorrow. It's only Tuesday. There's 3 more days of opportunities. Well, with Bitcoin, it trades 7 days a week. The opportunities aren't usually as abundant on the weekend as they are through the week, because there's just not much volume. Here's Saturday, there's Sunday. You can see those candles are very small in comparison to Monday and Tuesday's candle. But moving forward, since you got this, you could potentially look for longs. Would I? Not yet. I have a rule, and that rule states that I cannot look for longs until you get daily closes above the 21 exponential moving average, and until you get above the 50 on the RSI. Until that happens, we have to look for shorts. It's just the way the strategy works. Am I always right? Does the strategy always work? No, it doesn't. It's not. There is no strategy that is 100% effective. I lose trades occasionally, but I win more than I lose, and that's what's important. I mean, obviously, you wouldn't want to make a YouTube channel where you take live trades if you can't at least win 50% of your trades, right? But you don't even have to win 50% of your trades. The way the math works out, you can lose up to, or you can lose like 70% of your positions as long as you have rock solid risk management. And you also have to nail 3-to-1 risk to reward trades also to lose 70% of your entries. You have to have a higher profit potential. We just strive for 2-to-1, and then we move our stops, and then that way, if we do get downside continuation, or if we're looking for longs and we get upside continuation, then that's when you make the real money. The intraday money is just that, intraday money, just to keep your P&L, just to have that, to sustain that growth. So that way, over time, you consistently add P&L or add profits to your P&L. Then, as long as you're using your risk basis on a percentage, then over time you're going to see a rapid expansion, because as your P&L grows, your trading position sizes grows, because you're still always risking 1% or 2%. So if your portfolio grows 12% or 18 or 20% in a week, then next week you're coming to the marketplace looking for entries with a P&L that's 20% higher than it was last week. So your position sizing is going to adjust. It's going to be higher. But no, I don't want you to try to get short. We know we got weekly res up there. I mean, you could potentially look for that. I don't think you're going to get up there today. This is weekly res right there. For you that are just listening and not watching, that price is $17,108, spot 90 cents. 17108, spot 90. That's weekly resistance. If you get up there, you could potentially look to take a short trade. I don't think it will be a short trade if you get up there, but you could look to see if this holds as resistance. Or you could squeak out a downside scalp from there. I would say you will probably get at least a small bounce off of that level if price were to push up there. And when I say bounce, I don't necessarily mean a bounce to the upside, guys. When I say bounce, I just mean that. Bounce. This is a bounce. Price pushes up, hits the level, and bounces off of it. That's a bounce. That's what I mean when I say bounce. So you could push up and bounce off the level. If you do that, you're only looking for a very small profit potential, very small move lower. Wait for price to get, 2-to-1 from your risk to reward. You obviously wouldn't be putting your risk way up there, because then you would need price to move way down here just to make a 2-to-1 risk to reward. No, you'll find the intraday operating range. Hopefully it's within this level. And then you can look to take that short off of the intraday resistance level that's close to this level. So you might not even get a tag of that level. But you damn, like for instance here. All right, so let's write it down here. I'll show you what I mean. Weekly support. Weekly resistance. Then we can go into the intraday. Let's get rid of this because I only care about moving averages on the daily or the weekly. And you can see how this played out, right? My crew, everybody in the Discord, was watching this level. Some were looking to get long here. And some were waiting for this level to take profits. If they got short over here, they're taking profits here because they know that there's a high likelihood that you see at least a small bounce from here. We didn't expect this size of a bounce. That's not a small bounce. That's a freaking big bounce. All right. But typically you do get bounces off of these areas. All right. So when was it made? That's the important thing. All right. I don't know how this works. Right there. Yeah, that's where it was made. Right there. All right, beautiful. That's where it was made. Okay. So you can see this is where it was made. Right here. This was the very open of the week. This 1 hour candle right there. Sunday, December 4th at 1900 hours. That's the weekly open. That's what time Bitcoin closes every day, 1900 hours. For me, that is 7 p.m. Eastern Standard Time. But you can see when it was made here, you didn't get a bounce on the way down from it, which if you were looking for longs, you would have been stopped out, right? Because it broke right through. But you did test it here and here, these two areas, and then you moved away from it. Then when you bounced and you traded back up to it, boom, you bounced off of it. This is a trading opportunity right there. And this is your operating range. That's support. So when this candle was made here, you would have been looking for short entries. You would have waited on weekly res. Boom. There's the bounce. You get short, stop above this wick, and then it moves down, and boom, you take profits right there. Same for the long side, right? Any one of these right through here, this wick or this wick, you could have gotten long here, stop below this wick, and then you sat in this trade for a long time, and then right here your butthole was puckered up very tight because you thought you were going to get stopped out. But as long as your stop was under this wick, you were good. Price traded at it, and then shoom, boom, that's where you take profits. Like that. So there was a short opportunity inside of this operating range from here to there. And then there was a long opportunity from here to there. Does it always play out that perfectly? No. Otherwise, you would just be able to program an algorithm to do this. You can program an algorithm to do it. I just don't know. I've never actually done the back testing to see if taking that many trades in one range is profitable over time or not. You can if you want. I'm just not going to, because this is what I do, right? Phenomenal short here off of weekly res. Phenomenal. And then this one broke down. Boom. But you didn't get any continuation. It chopped right back up. This is the very definition of a choppy marketplace. Look how weekly res held a support here, 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 and here before ultimately breaking down. But then, so it can be very, very difficult to get in these trades and get any kind of continuation, because the market is only doing one thing and one thing only. It is liquidating everybody. It's always looking for liquidations. That's why you get this crazy mayhemic price action. It's liquidating people. This swing low right here, for instance. Look how long this low stays intact until right here. Boop, boop. That little wick low right there was simply a liquidation on that swing low. Once you liquidated that swing low, this was the swing high. That was the target. Right here, you got that one. Did you ever get this swing high? Yes, you did. Now this swing low is going to be the downside liquidation. All right, so now this swing low would be the downside liquidation. This swing high will be the upside liquidation. We also know that there's another liquidation up here potentially, but we're just looking for the two most, closest areas. So there you get that liquidation. Now that makes this one the next area for liquidation. Boom, 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 come down. Boom, liquidated that. So now this becomes the liquidation, as this still remains the same. This is the lowest liquidation since Wednesday, November the 30th. You go up, liquidate this. Now this becomes the liquidation to the upside. The market immediately rotates lower. Boom, 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 boom. Liquidation. This now becomes the liquidation spot. Boom, we just got it. All right. So now the new liquidation spot to the downside is there. Right at weekly support. And the upside liquidation is all the way up there. Now the market will still go after these short-term swings. Always, yeah. Because there are stops setting above every single swing high. There was stops setting above this. That's a daily high. This is a potential daily high. There was stops setting there. There is stops setting here over this one. Next place will be here. Then here. Then here, right? So the market, if it's got enough downside liquidations, it will just move higher and look for supply up there. That's what the market does. That's all it does. Back and forth, all the time, over and over again. And we know this, so we've identified that, and that plays into the strategy. We're either usually looking to sell to the liquidation, meaning we get into a position, and then when the liquidation occurs, we want to aim for that, or we wait for the liquidation to happen, and then we take the opposite side of the trade. But we generally only do that during high-risk news events, because what I've learned over my extensive amount of time doing this stuff is that that's the best time to deploy that strategy, because typically the market trends, right? So if you try to get long if you try to get long at every single daily low, you're just going to continuously get stopped out during normal trending conditions. Right? So you only want to do that. That strategy works best if you do it during a high risk news event. Your FOMCs, your non-farm payrolls, and stuff like that. All right, let's answer a few of these questions and we'll wrap it up. Because, you know what? I mean, there's nothing for us to do here. Not at least until we won't even be able to look for entries until we get up to 17,108.90. Let's see if we got any daily res. Nope, there's nothing in here. Nothing. There's an old swing low support right there. So you might bounce here. But I don't know if you're going to continue lower, or is the low in? Is this low in? We are positioned for this being the low, because this is where we bought Bitcoin. Right there. On this day, Bitcoin traded down. We waited for the liquidation, and it happened right there. Then we bought it, and we put our stop under that low, and we were lucky because price traded away, and it still is. It's come in for a retest, but what I wanted everybody to remember, you lost your daily 21, but if you fib from that swing low to this swing high, look where you're finding support. Okay? So technically, until you close a daily under this blue line, your near-term uptrend is still intact. This is still only a retracement from this main price swing, from this swing low to there. This is only a retracement. Price could absolutely continue to go higher and higher from here. I don't know if it will. I know that with the CPI print that we got last week, that's good news, man. Inflation is trending lower. We got this bearish reaction because the Fed was talking about inflation and more inflation, and then he even had the balls to talk about recession. So this right here was the market pricing in that potential recession. If this is just a retracement of the longer term move, even though you've broken down below the trend, because here's your trend, right? Your uptrend, bounce, there's the breakdown. So this right here is going to have people looking for shorts as well, right? So we won't have any definitive proof that the probabilities are higher for downside liquidations until we get under the 702 or the 768 or whatever 7 number Fibonacci number you want to use. Whatever, I don't care, right? It don't matter. It's the same thing. It says the same thing. This downside break closed below the 618. To have this kind of a bullish reaction the day after, this smells like a bear trap to me. It definitely does. But as long as you're under weekly resistance, the downside is still the threat. If you close a weekly candle above weekly resistance, then you can say this was just a pullback, right? Because then you'll have at least definitive proof that resistance has been broken to the upside. Meanwhile, your only weekly support, which, last week's close counts for support as well. So technically, you have 2 weekly support levels now for this marketplace. You have 16,252, spot 53, and 16,741, spot 16, until you get a candle body close under this. This could be an area to look for potential buying opportunities. You're always a buyer on the bottom, the supports. Okay, you're always a buyer. It doesn't matter what your bias is. You will always be a buyer. That's the way this works. You cannot be a seller here. You can only be a buyer. If you got short up here and then you're closing your short position here, you're buying back your position. So you're still going to be a buyer. And then if you have a long bias, you're getting long here, you're buying it, then you will be looking up here to sell it. So like with support and resistance, you can only be a seller here and a buyer here. You cannot be a buyer here until this becomes support. Right now it's resistance. We have to treat it as such. So until you get a weekly close above it, then you can look for this to act as support. But first, you must get the close above. If you don't close above this, then this candle is still leading the parade. Because inside of your longer term price swings, like weeklies, like for instance, we were looking at this price swing from here to here, right? From there to there. This is just a retracement from this price swing. But I could also do this. From this swing high to this swing low is also a price swing. And that this rotation here is for the longer term downtrend. So it just depends on your time frame will dictate your bias. That's why I say it's best for you to just check your biases at the door. Just don't even have them. Who gives a crap which way the market goes? To be honest with you, Bitcoin can go to zero if it wants. But at some point, I'm going to have to, sell my Bitcoin before that happens. Otherwise, all this trading I'm doing to make more Bitcoin is going to be for naught. And trust me, I am not going to let that happen. Gang business. Yep. What's up, y'all? Good mornings. Good mornings. A lot of good mornings. Glad to be here. Good afternoon to you and everyone. Good afternoon to you as well about this. Good morning, Michelle. Or afternoon. Thoughts on silver? Let's go look at it real quick. Excuse me. Yeah, it's getting a nice bounce. That measured move worked out to perfection, didn't it? I mean, perfection. We were looking at this range here, this operating range, and basically when we broke down here, we were shorters, and we were looking for this measured move right here, something like that. We didn't quite get down there though, but almost broke all the way down there. But since you got down here, you made a new support. You made a new support where? Right there. Weekly support, baby. Objective levels, guys. I didn't say that's support. The market did. because there is your bearish weekly close. That is support. Boom. Up. Just learn that. Learn how to identify what real support is, what real resistance is. Throw away everything else you've been taught about support and resistance. Learn this style. It will help you get much better entries. Right now, it looks okay. I mean, from this swing to there, one could argue, that you're getting there. So right now, I mean, what could potentially happen is you could liquidate last week's high. I mean, as far as the monthly goes, it looks bullish. The next monthly liquidation is up here, though. And the next downside liquidation is there. So you do have a potential supply zone there. But let's just watch the weekly for now. The monthly levels don't become relevant until you get close to them, okay? Then they'll become relevant. Like, just because the market has liquidated all of these months' swing highs, it doesn't mean that, it's going up here to liquidate this one. That's not how to read that. These only become relevant, like, for instance, if you close a monthly above 24.79, which is monthly resistance, then the probabilities become a little bit higher that there's potential to see 26.22. But let's not get ahead of ourselves, because the market will absolutely make reversals off of just weekly highs. We've seen it happen. It happened on the dollar. That's how I got positioned so perfectly on that USD JPY short, by watching the dollar liquidate its previous week. So you're in trouble as long as you're under this, which also means as long as you're above this, as long as you're above 23.47, the upside target is 24.13. As long as you're above this. If you get below this on a closing basis, well, not that, but if you get below this on a closing basis, your downside target then becomes this. Okay? And so on and so forth. And just repeat the process. That's how you get your bias. It's that simple. Right here would be a decent scenario if, when you do liquidate this swing low, you get downside continuation. If you get that downside continuation, then this would then become the next downside target. Right now, clearly momentum is bullish. You're above the 50 on the weekly. So technically, on the weekly time frame, I would only be looking for longs, but you're so far away from what is considered to be the mean. The mean is all the way down here. So you could see a reversion to the mean by liquidating this swing high and then turning around and coming all the way back down to there, because that's your last area of resistance. This becomes an area of potential demand, and with this climbing up with it, it would make that level stronger. So I can't be a buyer up here to target that wick, but I could be a potential buyer, here or here to target this wick, as long as this doesn't take it out. If this takes out that high, then it becomes a whole different scenario, and then reverses, right? Like if you get up here, take out this swing high, and immediately get like a bearish engulfing, then the probabilities become more of it looks like it wants to revert back to the mean. So we're probably looking for downside trades, at least until you get the mean reversion. So right now, silver's in a spot where you can't do anything with it. I guess that's just a really long-winded answer or a long-winded thing to say. There isn't a setup on silver right now, unfortunately. Big strong day today. We must be seeing dollar weakness. We are. We're getting dollar weakness. I mean, as long as this continues, guys, it's going to look more and more and more like the top is in on the dollar. I do see some analysts saying that your old school technical analysts that use patterns and trend lines and stuff like that, the subjective shit. Learn to be objective. It will help you in your analysis. I promise you. But anyways, they're saying that this is a descending wedge. And descending wedges typically look are bullish breakout potential patterns. So when you have descending wedges, typically they look for something like this. All right. On a descending wedge. But I got news for you. If that's going to play out on the dollar, then why wouldn't it play out on Bitcoin? Because longer term on Bitcoin, which I already made a Twitter post about this, you have a descending wedge here. And what makes this descending wedge more relevant, in my opinion, well, I guess it wouldn't be, is because you are at oversold areas on the oversold on the RSI. Plus, you can see from this low to this low, this is a clear lower low. That's trending lower. You have divergence here. So you do have bullish divergence on the weekly time frame with Bitcoin, and Bitcoin is forming a descending wedge, which typically old school traditional pattern traders look for this to be an accumulation formation. And if you want to throw the word Wyckoff in there, sure, go ahead. I don't give a damn. It doesn't mean you're a smart analyst. It just means you're a pattern trader. If you're looking for that to play out, I suggest you be a price action analyst, but you can be whatever you want. If you are a pattern trader and you want to take some of the knowledge that I'm teaching you and apply it to these metrics, go ahead. I don't have a problem with it. You're going to have trouble being consistent in your entries and exits, but that's what I preach the most. No matter how or what style you trade, you need to be consistent in that. If you're a pattern trader, my suggestion to you is find the pattern that works the most, that has a higher statistical edge of working. Like, for instance, how many times does a descending wedge have bullish breakouts? Get the data, find out. If it's something like 60% or higher, boom, then only trade those patterns. You can't get consistent if you're trading all the patterns, though. You see what I'm saying? Because it would take years and years and years to basically regulate that data, put it into different categories to even see if you're profitable or if those patterns are profitable. For instance, how often does head and shoulder patterns work out? Right? How often does this work out? Bull flags, bear flags, all of those patterns that people trade, you would have to do like 2 years of trades on one pattern to have a big enough data set to even see if the pattern is consistent or if you should even be trading it. You're looking at 15 to 20 years minimum to figure out which patterns are the best and all that. Now, you could probably use computer programs to help you along in that time to backtest old data, but remember, what happened in the past has no bearing on the future. People are taking positions based off of what's happening right now, not yesterday, right now. Yesterday's already come and gone. Anybody that put money into a portfolio for whatever reason has already done it. So whatever happened yesterday does not mean anything for today. Ever. Order flow comes in every second of the day, and that order flow consistently changes every day. So that's why I'm not a pattern trader. I could never find success doing it. But statistically, they're looking for that to be bullish breakout. So, I mean, which one's gonna work? Is the dollar's descending wedge gonna work? You're not at oversold levels on the dollar yet on the weekly. So if I was a gambling man, I would probably say that Bitcoin is the one that's going to break out to the upside, more or less, because it also has that confluence with the RSI being oversold and divergent. The Barry White of Market YouTube. Why, thank you. I'll take that as a compliment. Good morning, folks. Good morning. Silver above 50 on our side. Bulls in control. Day res not looking to short that, especially with the DXY down. No, I agree. You definitely should be looking for bullish entries. You're just going to have to wait for bullish area to look for those entries. Like a daily support, for instance. You know what I mean? Obviously, people don't want to look at weeklies. I try to get a broader view of the market, see like kind of what's going on. First place you could look for potential longs, 23.23. Would I buy that right now, understanding how overbought it is? Probably not. You're printing bearish div. So what I would be more interested in would probably be last week's high. How does price react to that? If you go up and smoke that today and have an instant bearish reaction, I'd probably be concerned with lower prices. So I don't think I would be looking for longs, not even at 23.23. I would wait for it to get a little bit closer to that 21 exponential. Let's see what the daily time frame looks like. We already know it's diverging. It's not divergent yet because it is divergent. That's a close. This is a higher close. That's above. This is below. So there's clearly bearish div there. But this week and this week was probably that divergence playing out. So this candle right here has probably zero to do with this bearish divergence that's already played out. So I wouldn't be looking to get short based on this divergence is what I'm trying to say. Yeah, I mean, the moving averages are all underpriced, which is good. That's typically what you want to see in a reversal. You have the 50 going above the 20. The 50 crossing above the 200. So that's technically classed as a golden cross on the daily. So that's good. The one caveat is your 100 is still under the 200. So you would kind of want to see The 200 simple has crossed the 200 exponential, which is good, right? This usually does ride under the 200 exponential because it's a slower moving average. But you would like to see this 100 get above that purple line, and then all of your moving averages would be structured bullishly. And you haven't really seen that since back over here. And at this point, you were already at the top of the bullish trend. So, like, right through here is basically when you started to get all that. Let's break that down. It wasn't until here that the 200 simple got under the 200 EMA. And you can see, like, if I just put my cursor, like, right before that, like, this is after. I want it right before the cross happens. So right in there, right before that cross happened, like 2-3 days before the cross happened, that would have been a phenomenal place to be a buyer. Because you can see just how much momentum that thing got after that cross happened. But it was too late after the cross happened. The algorithms they were already pricing the cross in. So you just ran completely out of supply. Demand was just so thick. And then boom. So, I mean, you can wait for something similar over here to be a buyer if you wanted to. Well, no, I mean, you getting it now, but that 100 isn't up there. If that 100 was up there, that would be much better. Yeah, maybe I would be a buyer at $23. I don't know. How about this? If you reject here without taking out that high, I would love to be a buyer at $23. Would love it. But if you take out that high and have a bearish reaction, it's not going to look so great. As long as it stays above all this stuff, though, it'll be okay. Heath needs to commentary on one of Tino's vids. Hey, man, the dude knows what he's doing. He's an entertainer, you know what I'm saying? He's an entertainer, that's for sure. You seem to be waiting to put in a market order at your level. Just curious why you don't put a limit order. I had a limit order sitting up there already, Monk. Usually I do market in, but I had a lot of conviction on that trade. Biddy tag 2 week support moved. Yep. Read that. Ed D, my pronouns are fat/fatter. Thank you. The trade was great. At 10x leverage, I'm good. Awesome. Good stuff, Tanko. Good stuff, man. Paid in 10 minutes. Yeah, we did. Back to Call of Duty. Probably later. My girl's here until 1. I'm going to make breakfast here in about 15 minutes. What's up, Brandon? Is there any chance BTC hits 17,100? Well, I mean, you're asking me to predict the future when you do that. And I've already told you that it's just my opinion. You know what I'm saying? Nobody can predict the future, man. You don't need to be able to predict price direction in order to make money in the markets. And I got news for you. That's doing my strategy, or if you deploy an option selling strategy where you sell, there's a myriad of option strategies where you're directional neutral. You know what I'm saying? You're delta neutral. That means you're not betting on any direction. Tons of them. Those are the strategies that have a higher hit rate than trying to, predict direction. My strategy is not about picking direction. It's about taking entries at high probable areas. Like I said in the intro, this is the official Trade Talk channel. I'm going to show you how I analyze price for the most higher probable entries. That's it. We don't necessarily, we're not trying to predict direction. Now, obviously, if we take a short or long, we need the market to move short or long in order to make money, but you don't have to be on the right side of the expansion, because there's a high probability that we've already identified the range, or the operating range is the term I use, right? Notice how I'm starting to coin terms like all these other YouTubers and Twitter guys. I got told the other day that it was a blow off boomer bottom bounce or some shit. So I'm going to start coining my own terms as well. Throw them on some shirts. First term, random market violence. Second term, operating range. If I see it on any of your YouTube channels, I'm coming after you. I'm going to throw you a strike. No, I'm just kidding. But yeah. Yeah, we're not trying to predict direction. We're just doing it at high probable areas. That's all. But 17K is literally a nut hair away. You already hit $17,000 on Bitget. What's the high on this? Yeah, 17,060. So yeah, I think there's a high likelihood we go to $17,000. I think we will turn around at exactly $17,060.86. I smell a rat with a dollar if these interventions are shown to be futile, like with some Soros, crazy dislocations are on the table. Yeah, but we already know, Run DMC 555, that the interventions aren't futile. That's what I've been trying to say. We already know they are working, because before the Fed interceded with the interest rate hikes, and it was trending higher. Inflation was trending higher. Then the Fed intercedes and starts its intervention and starts injecting rate hikes. What happens? The CPI number tops out at 9.1 and then slowly begins to make its descent. The last two CPI prints we've had were very good ones, meaning the descent is happening more rapidly. You're seeing a bigger move with these. That means, it is working. Over time, you can see it actually playing out. That's why I said, if that's the top 9.1 on the inflation, then there's a really good chance the lows are in. That was obviously before FTX. This whole move lower can 100% be attributed to FTX. This market was trading very correlated with risk over here. So when the S&P 500 had its big move up, Bitcoin was crashing. That was because of FTX. You take FTX out of the equation, Bitcoin's probably trading at 19 or 20 G's today. Right? How about O'Reilly? Enter that weekly support. O'Reilly, I want to see it come off more. And another thing about O'Reilly, my friend, is if you if risk, you're going, there's a likelihood that you could see capital allocation come out, or that rotation come out of O'Reilly and go back into higher risky things, because O'Reilly is considered a safe play, right? But I don't know where you bought it, entered at weekly support 816. Well, how about that? You're up $30. Nice job. Nice job. Hold it. Make sure you take profits, though. You're into a potential supply zone on the daily. And you're up into last week's close, open. So you want to take profits on O'Reilly. Yeah, like now. So you entered here, take profits there. You see how you did that? That's your operating range right there. Beautiful. Now take profits, move your stop to break even. That way, if more capital rotates out of O'Reilly, your stop will get triggered and you'll be safe. You will have banked a few bucks. Love it. Great stuff. Well, as far as the fake out on Bitcoin wedge, could be something like Max Payne, have to make people believe it's going to zero. I think we've already seen Max Payne on Bitcoin. There is a lot of on-chain data that suggests that we've already seen capitulation on Bitcoin, and we are still seeing capitulation on Bitcoin with on-chain data. And I'm talking about coins that are 5 months old or older. You know, your hodlers are the ones capitulating. So, yeah, and they are doing it at a loss, which is typically what you want to see before you become a buyer. I made a Twitter post about it. If you want to follow me on Twitter, go in the description. Make sure you click more, because they changed everything about YouTube on desktop or phone. You go into the description cuts off. You just got to click the more. If you click more, you'll the window will drop down and you'll see my Twitter. You can follow me there. There are a few people out there pretending to be me that are not me. So please, if you want to follow me through my page, my YouTube page. Please. Because it really hurts my growth. Like, we've shut down 3 of them, and one of them had 4,000 followers, another guy had 3,700 followers, and another guy had over 2,000. So I mean, that's potentially 10,000 followers right there. It's not like I'm trying to grow it. I don't want people getting duped, because those fake accounts are likely trying to sell you something also. I'm not. So stay away from the fakers. Use my description to get to my Twitter. What's your thoughts on the UK 100 chart on Oanda? UK 100 chart. Let's go look at it. On Oanda specifically. Looks like I looked at this a long time ago. Looks okay. It's in a range. It's in a longer term range. These moving averages are structured nicely. So if it does find support, it is at weekly support. There's weekly support. So do the buyers step in here? If they do, I think, 73, 72 spot 80 is a decent place to look for buying opportunities. Yeah. Better yet, use the daily support. It's lower right there. 73.24. Looks like you've already tested that level today and you are getting a slight bid. So moving forward, if you're going to see continuation to the upside, I do not want to see a daily close under 73.333 or 73.33. If you get a daily close under 73.33, then you're going lower, more than likely. I don't know for a fact you're going lower, but more than likely you are. This was a pretty nasty drop. You are into an area on these bigger type funds and indices or whatnot. People will step up and become buyers at the 200 simple and 200 exponential moving averages. They just do, right? They just do. But you got the UK has a lot different stuff going on in it right now than we do over here in America. I think the Eurozone has double-digit inflation still. So that means higher than 10. We're at 7.2, or what was the last print? 7.1, I think. Yeah, 7.1. So they got a little bit more difficult road ahead of them than we do, I think. But yeah, keep an eye on 73.33. Is just, if you get a daily close under it, scratch the position. Sell some random market violence t-shirts. Yeah, I could probably put that together. Can you check Tesla? Yeah, we'll look at Tesla. We got to wrap it up because I got to cook bacon. Yeah, Tesla's been getting beat up. I guess Elon put out a Twitter poll yesterday or something. Something in the tune of, do you guys want me to focus more on Tesla or Twitter? And then when the majority or overwhelming majority of votes came back Tesla actually got a bounce. It was trading up almost 5% at one point pre-market yesterday. But as you can see, I mean, this thing is getting killed, man. This is more than likely a long squeeze. So you, just like short squeezes, you can get long squeezes as well. What happened was this was the low. So once this got liquidated, that's the lowest area of liquidations. People went long, me included. And I did make money on Tesla, but I was only doing it as a day trade. I wasn't doing it as an investment. I have bought a couple shares to add to the portfolio in this move lower, though. So let's not get that twisted. But this was for specifically just a day trade. A lot of people bought it for an investment, and they got squeezed. That's why you've seen this happen. Because notice from the support here, there's weekly support. On this week, you gapped down and went lower. That's called a gap and go. When you see the candle gap to the downside and go, meaning there is no retracement back up to fill the gap, that's bad. That's heavy selling, and that's likely stop losses getting triggered. So this is likely a long squeeze, and you just got to wait for support. Next area of potential support, 136.17, and then under that, we have 129.35. I can't do anything on Tesla until it gets to 136.17 or 129.35. It's in the middle of no man's land here. I can't buy it or sell it. I can't do anything with it. But down here, we'll talk about Tesla again. Right now, we can't. There's nothing to do on it. Just did take profits. Thanks, Heath. Keeping some on, maybe long term. Yeah, go ahead. That's what you do. You are controlling your risk factor by doing that. Good stuff. Like, come on. Yeah, if you guys don't mind smashing the likes, we got more likes than we do people because, you know, the longer the streams get, people start to bounce. They have jobs and lives and stuff. We have been going longer than I'd like to go lately, but it's okay. We're going to go ahead and wrap it up with that. Wait on 136 or 129, and then we want to see if those two areas hold support. If they do, we will absolutely think about maybe getting long for a bounce trade. All right. Once again, let's just go over this real quick. On the post I posted the other day that my favorite plays were for looking for shorts was at the beginning of the week, New Zealand USD for potential dollar strength. You can see here right at our level, that's where we were looking for entries, but got stopped out. But there may be another opportunity to look for shorts on this. This is just a hedge play on a potential DXY bounce. All right, because the DXY is getting heavily oversold. Okay, heavily oversold. So when we starting to get into these regions, we have to worry about a potential return to the mean, a reversion, if you will. It's not that far away from the mean, so you could have another parabolic run to the downside before you do get that. But nonetheless, these are plays that I think you could look for a potential hedge on that. NZD right here, yeah, it looks bullish. It looks like it's only a buying opportunity. But if it is just a hedge play, it is my favorite. This thing is damn near parabolic to the upside. Liquidated this swing high, and then almost immediately you rejected. You rejected in one day. Traded above it for one day, and then boom, boom. It's not a blow off top or anything, but you can clearly see a head and shoulders pattern forming there. That is typically a reversal pattern. We don't trade patterns. We trade objective price points. As long as you're trading under 0.63821, I think you can look for shorts. Weekly res on that, let's say it like this. As long as you're not closing weekly candles above 0.64141, I like it lower. I also like Euro CAD for potential hedge plays. If oil gets a bounce or starts to find some demand, that'll strengthen Canadian dollar. And if the dollar does indeed bounce, that will weaken euro. So I like Euro CAD lower for at least a small hedge. And then I didn't say anything about Euro CAD, or I did. No, it was Aussie Swiss. I don't remember. But NZD, USD, Euro CAD, Aussie Swiss. This is the one that's playing out really, really good. We were looking for shorts yesterday on it. And you can see currently today, still playing out. Broke down below support, traded right up to today. Today. Here's your daily open. Right up to the resistance and down. Trust me, guys, this strategy works. Thank you all for being here so much. We will see you guys again on Thursday morning, same time, same place. Make sure you guys trade safe. Make sure you trade. I also think the Fed increasing rates is a hammer to smash nut. They are destroying the economy to bring down inflation from commodities, war, and deglobalization. Yeah, I mean, naturally, man, there's a lot of bad stuff going on right now in the world that screams bear market. I understand all that. I do. I really, really do. I really do. So we'll see. Only time will tell. But to end on that, make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.